Sacrificing profit for growth is a great strategy. And I guess you can go a little bit longer term if you're publicly traded and using other people's money. So most small businesses aren't going to turn a profit for a couple of years. My point was you don't do it for 10 years because you'll never make it.
Hi, this is Jared Linton on behalf of Smarter Loans, and I am here with Bruce Marshall, the Vice President of Company Capital. Thank you very much for being here with me today.
Yeah, my pleasure.
So let's start off by talking a little bit about your backstory. We'll rewind a little bit and discuss sort of what got you into this space in the first place. So what interested you in joining the sort of fintech space in the early days?
Yeah. Well, as you can tell by my appearance, I've been at this for a long time. The owner of this company, he and I go back 25, 30 years, and we've always been in sort of financial services. I'll only go back to about 2008, and he owned an ATM company. He had ATMs all across the country. And in about 2008, when the chip technology was introduced, a lot of our clients didn't have the $5,000 or $10,000 it cost to upgrade all of their ATMs. And so Steve, who owns the company, owned the ATM company and still owns Company Capital, had an idea about advancing our ATM clients enough money so that they could upgrade their ATMs to chip technology. So that was about $5,000 per machine. Some places had, half a dozen machines. So in order to be repaid, I'm sure if you know, but an ATM, the service fee on there is $2. Typically, $1 goes to the ATM company and $1 goes to the merchant. So we advanced quite a few merchants the cost of upgrading to PIN, but we took the full service fee. It was a loan, basically. So we were getting repaid like $1 at a time. But back in the day, 2008, ATM transactions were in the thousands per month. Nowadays, they're only a couple hundred. Back in the day, so we were advancing money to buy chip technology, and the merchant could pay us on every single transaction. So it would take them 6 to 12 months to repay us the advance plus a fee. And so we thought, well, that's kind of interesting. That's, makes a bit of sense. And so started doing a little bit of research and found out that there was a similar concept going on down in the States, advancing money against future credit card receivables. So Steve sold the ATM company in 2009, 2010, and started Company Capital. Because we saw what was happening with our ATM clients going, yeah, that's a hell of an idea. Give me my money early, and I'll repay you over time, relatively short period of time, 6, 12 months, like I said. And so we started Company Capital. In the early days, in 2010, I think we started. In the early days, we were just doing MCAs, merchant cash advance, which is basically advancing money against future receivables. So they were primarily retailers, of course, because a lot of B2B didn't take debit and credit. So that's kind of how we started. It kind of stumbled upon it. Steve was selling the ATM business anyways, but we saw the opportunity in lending money. So that's sort of the start of Company Capital. And we've been at it for 3 to 4 years. We were probably only the third company in Canada. Thinking Capital, who used to be called Advanced, I believe, they were the first in, and then Merchant Growth over in Vancouver started in 2009, and we started in 2010. And then On Deck came up to Canada in 2015, and so we switched from just doing merchant advances to doing full-on term loans in 2015. So we've been at it a long time. I've been at it 10 years, and in this industry, that's almost a generation.
Yeah.
We've been at it longer than most. We're by no means the biggest company. We're relatively small, and that was strategic. We decided we wanted to keep it small, and it's paid dividends for us. There's a few companies that have been around for 10 years that really wanted to dominate the market. So they sacrificed profitability for market share. And there's a couple companies that still haven't turned a profit in 10 years. That's not a strategy that Steve or myself really believed in. We didn't want to be the biggest. We're all pretty old, so we didn't want to be at this for 20 years, but we wanted to have a good, well-run small company and make it profitable.
And so when you started out in 2010, I mean, You found a unique solution to a problem that small businesses were having, very specifically within, the ATM lending space. Did you foresee this explosion in digital financial services? Were you sort of thinking about it as this is the way of the future, this is going to be a whole new industry, or was it more contained to just, we have a solution for a very urgent need without considering, where this would all take you in the 10 years that's followed?
Yeah, at about the first 5 years, we saw the opportunity for small business loans because we know the banks aren't doing it right now. They have never really been serviced the small business community. We've been doing in company capital and in the ATM business. And previous to that, Steve Clark was the founder of Money Mart. And I worked with him there. I was the vice president of marketing at Money Mart for 15 years, and then the ATM business, and now this. And so basically, it's the common thread for the last 30 years for Steve and I is that we're doing things that the banks don't do.
Right.
And so for the first 5 years of company capital, we just saw it as another opportunity for doing something that the banks don't do. But then Fintech comes along, explosive in the past 5 years. But 6-7 years ago, we thought, that's kind of cool. That's got to be the wave of the future. Why wouldn't it be? But we're not a fintech company. We're a lender that uses automation to help us out. So a bit of a difference there in some of the fintechs these days, especially in lending. But we saw the opportunity originally as an underserved market. And we went at it for the first few years old school, just paper and email and telephones. But then, fintech really started to blow up in, I don't know when, at least 8 years ago. So we sort of have evolved into I wouldn't say we're a fintech company. We're a lender before we're a fintech. We clearly see the future. We didn't go out and spend a bunch of money on technology with a bunch of engineers in the office. We've kind of gone slowly on the technology side. We use Salesforce. We didn't build our own system. We use Salesforce, and we can power through an application and an approval in 3-4 hours. We don't do instant approvals because we put eyeballs on every application. So it's pretty fast. When we started, it'd take us a couple of days to do a loan. Now we can do it in half a day easily.
Now, you've mentioned a few times now that there was this gap in resources for small businesses. A lot of people think traditionally, if you're a business, you have an opportunity to grow, you need a little bit of capital in order to do that. You go to a bank and, there might be a lot of paperwork to get through, but eventually the bank will provide some sort of help, especially if, you're a strong, viable business. Why was there such a gap in the availability, and what's the situation like today? Has that improved?
No, it hasn't improved. It's probably worse than now. But everybody used to think, people would just assume that everybody that owns a business has got a lot of money. And so they would assume that they just go to the bank and it takes 2 or 3 visits and, you get a loan for $20, $30, $50, or $100,000. Well, that's, as anybody that's in the small business space knows, that's probably the farthest thing from the truth. If you're a business that has 5 years of profitability, you've got, you're a homeowner, you got a great credit score, you've got financial statements prepared by a professional accounting firm, you've got a business plan, you can probably get money from a bank. But if you're a smaller, family-run, or new, it'll do loans for a lot of new companies. And new, I mean, less than 2 years old. A small retail shop or a small construction firm or home services or you name it, if they're relatively new, they don't have a track record. And so the bank won't even talk to them. You need to have 3 years, 5 years of profitability before they'll even consider it. And if you are profitable and you do have a good business, but you're only doing, say, 20 grand a month and you're only looking for $30,000 to $40,000, the banks really aren't interested. They'll try and sell you a credit card. So the amount of time that it takes for a bank to approve a loan, it's not worth it for them. Nothing against the banks, but it's, thank God they're like that because I wouldn't have a job if they weren't. But they're just really not interested.
So how are you and other fintechs able to provide those loans without requiring that mountain of paperwork, that business plan, those financials, and the proof of profitability for 5 years? How can you sort of provide loans sustainably where banks have said that that's not a good business model? How are other companies able to fill in the gap and make it work themselves?
Well, the rates that every single online lender charges are a lot higher than the bank. So there's that. It's an expensive, you pay for convenience, you pay for speed, you pay for flexibility with an online lender. So that's one of the reasons we've been able to do it. We charge a higher fee. The mountains of paperwork don't exist in companies like ours and all the other lenders that Smarter Loans has on their platform. The fintech part of it, or the automation part of it, has really made the process a lot faster. Like I said, half a day. There's not a whole army of people looking at the file. There's one or two underwriters, and then perhaps a team of people that give it the final okay. So the speed is highly productive. It doesn't take us forever to do a loan, so we're not spending a lot of time and money on the underwriting process. We charge a bit of a higher fee. That's why this whole model exists.
Yeah, absolutely. How do you, when you started out, you were in a pretty small space. You said there was 2, maybe 3 other competitors at the time.
Yeah.
As we know now, those numbers have exploded in recent years, and there's a lot of different options for consumers, small businesses looking for financing. And, as you said, the rates are a little higher than the banks, but there isn't a huge range of rates within the fintech solutions, from my understanding. And that, the speed and convenience is something that everyone is offering to some degree. So how do you differentiate yourselves as a company from this very growing competitive landscape?
Yeah, we are a little different. We're smaller. We're not as aggressive as some of the other companies out there. And there's a certain segment of the Canadian population that appreciates that. We're not constantly hounding people. We've never done telemarketing. I personally despise it, so we don't do it. We have a little bit more of a personal touch than some of the other lenders. A lot of companies are trying to automate absolutely everything, and that makes sense because it's inexpensive, right? It lowers your overhead. And that may be a great idea when you're ordering office supplies, right? Automate absolutely everything. It's not that big a deal to order a set of pencils or whatever.
Mm-hmm.
We believe that in lending, the personal service is what sets us apart from some of the others. Like you said, everyone's fast. Many are flexible. We're extremely flexible, but I can talk a little bit more about that in a sec. So we really hang our hat on the personal service, and that doesn't really attract new business, but it really keeps our customers loyal.
Mm-hmm.
And the reason we've decided to do that is not only from basic market research and customer feedback, but we know that every single small business has a different story.
Mm-hmm.
We call it on our website, it says stuff happens, but we call it shit happens. And every single small business owner that ever sees this video will know exactly what I'm talking about. Stuff happens to every small business. A cooler breaks down, or equipment fails, or supplier phones them and says, I've got a bunch of inventory that you can buy for 20% off. Stuff happens, like emergencies and opportunities. And so trying to explain an emergency, a shit happens moment to an algorithm is impossible.
Right.
You just can't do that. You can't tell your story to your phone or to your desktop. You just can't do that. So we've done everything possible to answer every single phone call within 2 rings. It's a company policy. Like I said, everyone has their own story. Every single business is different. They've all got a story. And so we listen. We're pretty good listeners. And that's sort of how we're just a little bit different.
Yeah. You also mentioned earlier that you're intentionally small. You're not looking to grow into a large organization. You are a small business helping other small businesses. How does your sort of position as a small business help inform some of the decisions you make and build those relationships with other small business owners?
A lot of clients that call around, they'll call 3 or 4 different lenders, and they like our story. Some people don't. They just want the money, and I don't want to talk to anybody. Like, bugger off. I don't care. I don't want to be your friend. But a lot of people do. A lot of people have a story that they want to tell. They like the fact that we answer the phone. They like the fact that we're Canadian.
Mm-hmm.
We promote that a lot on our website, Canadian flags and Rocky Mountains all over the place. Yeah, so it's the personal service really that makes a bit of a difference for us, I think. We don't use brokers. One of the reasons why we've remained small is because we didn't go after market share. And most of the companies that went after market share hired a handful of brokers or 100 brokers. We didn't use the broker model. One of the reasons is we didn't want to pay the 10 to 15% fee. It's not that anymore, but in the early days, it was upwards of 15%. So we didn't want to do that. We also use our own money. So we don't have, a 7 to 10% cost of capital. And we also own the building that their office is in. So we've got a pretty low overhead, and we wanted to keep it that way. We wanted to keep it small, low overhead, don't pay a bunch of bankers, the cost of capital, don't pay a bunch of brokers. So we're able to provide pretty much the lowest rates in the industry. So that's how we attract new business, is by saying we've got the lowest rates guaranteed. But to retain those customers as loyal customers is we really focus on the personal service. We're not aggressive. We're not hounding people on the phone all the time. So that's kind of really our only real shtick.
Yeah. And you mentioned those oh shit moments that small businesses happen upon often. A lot of aspiring entrepreneurs might not know what that feels like and how common those situations are. For those who are considering going into entrepreneurship, what do they need to know about those unexpected financial problems that they're likely going to face at some point in their journey as entrepreneurs?
They need to be prepared for those moments, like you said. And if they don't have a lot of money saved up in the bank, they need to know that there actually is money available. A lot of people 5 years ago didn't know that this industry existed, maybe 8 years ago. And so they just thought if they had a if shit happens moment, they just have to deal with it because they weren't going to get $20,000 from the bank. But now, there's been a lot of lenders come in and spend a lot of money on marketing, and we've kind of ridden the coattails of the bigger companies. So it's, even though the industry is 10 years old, there's still a lot of small businesses out there that don't know that we exist. Mm-hmm. I got a feeling that COVID is changing that.
I was going to ask you about that actually, because I think that there may have not been a bigger oh shit moment in our collective history than there was just this past year. So what were some of the unique financial challenges that small businesses were facing at the start of the pandemic? And what challenges do you think COVID will continue to have on those small businesses moving forward?
A lot of them were just basically shut down. We shut down March 20th or whatever. And unfortunately, so did probably half of the businesses out there. Luckily, they got some government funding. A lot of the smarter guys, especially in retail, were able to pivot online and curbside and all that. What happened to us? Our business was basically cut in half. A lot of our customers got the $40,000 FIBA loan from the government and just paid us out. And so what is starting to happen, that we noticed in about August, September, a lot of our customers that had paid us out with FIBA money, they're starting to slowly come back. We had a pretty strong fall, nothing like pre-pandemic numbers. And then we had a surprisingly slow January and February, which was strange because typically after Christmas, especially in the retail sector, after Christmas, now it's January and there's nothing going on. So people come and get a small loan from us to carry them through until the spring. That didn't happen this year because the government gave out another $20,000 to a lot of businesses. So we're surviving. Like I said, we've been profitable since our second year. So we've been able to weather the storm. There hasn't been a ton of people calling us saying, I need money so I can survive for the next 6 months. I think a lot of businesses are just saying, you know what, I'm not taking on any more debt right now. I'm just going to hold on and hope like hell we can get through till everyone's vaccinated.
Right.
And we do get applications from people that say, well, I'm screwed, but there's nothing we can do for them because our loans are all based on sales volume, as is every other business lender anyways. So we base our loan amounts on your average sales. So if you're coming to us and your sales have gone from 30 down to 5, sorry, we can't help out.
So we've been talking a little bit about situations that happen to small business owners that they're not expecting that will put them in a financial strain or a financially difficult situation. Are there any mistakes that small business owners commonly make that could also effectively put them in a difficult financial position that you can sort of warn small business owners and aspiring small business owners to avoid? Common financial mistakes that you think small business owners can do without.
I know everyone that starts a business gets pretty excited and goes out and tries to add more technology or add more people or buy new vehicles or get a different office, or because they're convinced that they're, going to make $1 million in the next 3 to 5 years. Not unlike what our strategy was. We took it very slow, very easy, very focused. Don't spend money that you don't have quite yet. Keep it slow and simple. I know there's a lot of people that, see an opportunity and explode and just get absolutely thrilled about it. But the number one reason why companies fail is not only poor management, but lack of capital. If you've only been at a business for 6 months and everything looks really good and you blow your brains out on a bunch of new equipment or whatever, it's really not going to work. So, being a typical Canadian, be a little bit more conservative, I guess would be the advice. And that goes along the lines with remembering what we were talking about, what makes us a little bit different than some of the other larger lenders. We actually encourage people to take less money. And that sounds a little crazy because a lot of the lenders out there, especially these days when business is pretty slim, they encourage their customers to take more money, because there's pressure from head office or whoever that you need to get more money out the door. So the guys that are selling our services to customers are trying to convince people, take a little bit more, take a little bit more. We actually do the opposite. If somebody comes to us and says they need $100,000, they're sort of thinking that, okay, over the next 12 months, I need $100,000. I'm going to buy inventory now, and I'm going to buy inventory in 6 months from now. So we always try to tell people or consult people to take less. So if they need $100,000 for the year, we always ask them, well, how much do you need right now? And they'll say, well, what do you mean? How much do you need right now for the next 2 months? And they'll say, oh, I don't know, I need $20,000. And so what we do is we tell them, you're approved for 100, but don't take 100. Don't put that other $80,000 in your bank and pay a pretty high interest on it. So take 20 now, pay it down a little bit, come back in 2 weeks, 2 months, 6 months, whatever, and top up your loan as you need it. So customers really appreciate that. They appreciate the honesty of that, and they hear and they go, oh, that's interesting. You're not trying to sell me more money. And we go, no, we want to keep you as a customer.
Right.
So they use us like a line of credit. You'll see on our website that we actually call it a cash line. So rather than giving them all the money all at once, we don't force them to do that. If they need $100,000 today, they get $100,000 today. But if they don't actually need it all at once, we really encourage them to take a small amount and come back as frequently as they want. A lot of lenders will make you pay the loan off 50% before you can get more. We don't do that. They can get more in 2 days or 2 weeks, whatever time period they want. So that's another little bit of differentiator about us.
Absolutely. Well, you were able to, as you said earlier, reach profitability within, a year and a half, but you were also intentionally trying to stay small. A lot of entrepreneurs might look at that and say, well, I want to build a really big business, so I don't need to be profitable right away because there's this huge opportunity. And so, I'll sacrifice short-term profitability for long-term potential. Are you saying that for small businesses just starting out, achieving profitability should be the first goal before really trying to push it any further?
No, I mean, sacrificing profit for growth is a great strategy. And I guess you can go a little bit longer term if you're publicly traded and using other people's money. My point was there's companies that have done this using other people's money for 10 years. And that's just a disaster, right? That's just not a great strategy. So most small businesses aren't going to turn a profit for a couple of years. And that's fine. I mean, they can't wait around until they are profitable. You got to take the opportunity when it comes. So that wasn't my point. My point was you don't do it for 10 years because you'll never make it.
Gotcha. As you've mentioned earlier, have been a part of a number of small businesses over the years, including this one. Entrepreneurs just starting out today, though, as we're discussing, have access to financial resources that probably weren't available in your previous startups and even when you were starting this company. What are some of the most valuable financial and other resources that entrepreneurs will have today that their parents didn't have, maybe their older siblings didn't have if they were starting a business just a few years ago?
Well, it's a lot easier. There's easier access to capital, even in 10 years. And that's sometimes dangerous. If we see a company that's got loans with two other lenders like us or one other lender like us, we turn them down and just advise them, just say it's not a good idea for you to do. I don't know if they take our advice and they go to some other lender who would gladly give them money. So on the upside, there's plenty of places out there to get capital for your small business. On the downside is, I guess, advice to the newer companies is don't take too much. That's kind of like how we consult with our customers is, do you really need this money now?
So access to capital is a gift and a curse for entrepreneurs today.
Yeah, it can be.
And so how do you advise them to sort of think about moderating that? Is it just a matter of take what you need and no more? Is there sort of a rule of thumb for figuring out how to borrow responsibly without overextending yourself?
It's hard for us in a phone conversation, being a website that's just no one's met any of us, or a lot of customers will just kind of go, yeah, thanks for the advice. Yeah, they don't know who we are. But when they become customers, and we keep a pretty good frequent contact with them through phone and email and whatnot, and just the way that we speak to our customers, I know a lot of us have been there, done that, so they like to hear sometimes what we think. And like I said, we do discourage them from taking more than they need. And sometimes we can help out. Sometimes they listen, sometimes they don't.
Right. And so if someone is looking to obtain business financing, what do they need to know? What do they need to have ready in order to get started?
Well, with us and with most, all they really need is all they need to do is go online to our website. They can upload their bank statements. We can access their bank statements through our website. It's pretty similar for most. So the application part of it is pretty simple, but what they really need to know is, and think about before they go out and apply at 4 or 5 different places, what they really need to figure out is what do they need the money for? Say it's a construction company, or doesn't really matter what the company is. If they're looking for money to buy a vehicle or some other kind of fixed asset, something that has a useful life of 5 years, don't call us. Don't call any online lender, because most online lenders only have a 2-year term. So if you're looking for equipment for your company, like computer equipment or vehicle or some sort of high dollar 5-year useful life, you need to go to a different lender that can give you a 5-year term. That's the first thing, is really understand what you need the money for. We're good. We're short term. We're 12 months or less. We occasionally go 18, but our average deal is 9 months. And so typically, it's inventory. I'm going to buy $10,000 worth of inventory. I'm going to borrow 10 grand. I'm going to sell it all in 6 months, and then I'll go back and borrow more. So inventory is probably the perfect example of our company anyways. We'll do a lot of 3-month deals, not only for inventory, but for companies that have slow pay clients. We just did one the other day where this guy won a few pretty good contracts with the government. Well, the government pays in 90 days. And so how do you issue an invoice for $30,000 or multiple invoices, and now no one's paying you right now. So they come to us and get a 3-month deal so they can go out and buy more supplies to get the next job done. That's the first thing that people need to consider when they're applying with an online lender is, what do I need the money for? They really need to understand the cost, the clear cost. There's a bunch of different flavors out there in terms of how companies are quoting costs. Some companies will quote interest, but they won't disclose a origination fee. Other companies will charge for renewals. That's one really clear thing that advice would be to anyone that's applying for a business loan is get it in writing, get the actual cost of the funds, get a clear understanding of how much you're going to receive, and then just do the math.
Right. Watch out for sort of hidden fees.
Yeah. And then it's actually pretty important, I think. We're a little biased because we're a direct lender, which means, sort of the buck stops here. We lend our money. We're not a broker. We don't use brokers. We're the direct lender. So we care a lot more, obviously. So that's probably a little bit of advice when they're calling different companies. Just understand, am I getting my money from you guys, or are you going through somebody else to get the money? Because I don't need a middleman to get involved. Understand what you need the money for, understand the total cost, have a look at the contract before you agree to anything, ask for references.
Yeah. Do you put a lot of weight into online reviews and testimonials, that sort of thing?
I'd rather talk to somebody.
You mean someone who's worked with them in the past?
Yeah.
Gotcha.
Your friend or your spouse or whoever can write a fantastic review for you on Google.
Right.
A lot of companies use Trustpilot. If I was looking at a lender, I'd always talk to them, make sure they answer the phone, and ask for a couple references.
Any other just general financial advice for entrepreneurs and small business owners that you think would help them out? Anything that we haven't covered already that you think would be a strong message or an important message to get out there to Canada's small business community?
I'm a marketing guy by nature, so it would be mostly marketing related advice, but that's kind of not what we're talking about.
Well, it's always relevant. What would you say is important sort of marketing advice for small business owners to keep in mind? Probably going to be on a very limited marketing budget.
Yeah. Do whatever you possibly can to understand your customers. So in other words, I've been doing focus groups and surveys and stuff like that for 30 years. And with Company Capital, just for an example, we do a survey of our customers every single year and ask them what the service satisfaction, what they value most, what's most important to them, give them a list of criteria, and they go, yeah, that's more important than this. And it's pretty basic marketing. It's marketing 101.
Yeah. But
it actually works. We, for example, back in 2014, 2013, we asked our customers to rate a list of about 10 attributes about our service and rank it from 1 to 5 as to what's not at all important or what's very important.
Right.
And so that was 7 years ago, and we do it every year. But an example, 6-7 years ago, the most important thing about our service was the rate, the flexibility, the speed, and the simplicity of the application. So we do that survey every year, going backwards. So back in 2014, it was rates, flexible, fast, and simple. So we basically formed the foundation of our business strategy on what our customers are telling us. So we did everything we could possibly to have the lowest rates and so on and so forth. So 6 years later, we asked them the same question, and it's the exact same survey every year. Well, the rates aren't even there anymore. It's personal service, Canadian, fast, and flexible. So we've changed our marketing strategy over the years based on what our customers are telling us. And, any kind of small business, you don't need to spend a lot of money on it. You just simply have a little short survey at the counter, or if you're totally online, just do a quick email survey once a year, just to sort of monitor and measure the feedback of your customers. The customer is the only reason you're in business.
Yeah, and no, that's good marketing advice, but that's also good product development advice. That's good strategy advice all around. But from a marketing perspective, I think there's a lot of applications elsewhere as well. Bruce, thanks so much once again for taking the time to speak with us. It's really a company built on the philosophy that customer is king and built around understanding their needs. And that's great that you've been able to build a very successful business and we're profitable very quickly building on that philosophy. Well, Bruce, thanks so much once again for your time.
All righty. Thanks, Jared.
All right.
Talk to you soon.